Today, I want to take a very interesting look at where XRP might be going and why right now could be an extremely bullish time. This video is based solely on my opinion and what I'm personally doing in this market. I want to also let you know that some of the links below are affiliate links, meaning I may earn a commission, but this will be at no extra cost to you. And please remember, guys, under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description. This content is for educational and entertainment purposes only. I am not a financial advisor. I'm just a guy sitting in his room. And if you guys do want a place to trade, my partner on this channel, BYDFI, is offering a USDT bonus of up to $13,000 if you use my affiliate link in the description and you want to trade XRP as collateral. BYDFI is, in my opinion, a really good place to do it. So far, doing still very nicely with over 3,700 XRP in the profit. And as you know, I like to use XRP as collateral on BYDFI, one of the only places that I've found to do this very easily and successfully. So if you want to check it out, the link's in the description, and let's jump into it.
One of the first things that we keep in the back of our minds is that the equity market is the junior piece of the capital structure, which means that stocks respond to economic data and to bonds and to risk, and therefore all of that ends up affecting how the stock market does. So we don't look at the stock market as the tail wagging the dog, it is the tail of the capital structure. And a second principle we always keep in the back of our minds is that consensus tends to be risk averse and crowded. So meaning what is a widely held view and might even be the most logical is probably also the most logical for most people, and therefore it's not actionable. So we try to think about where the variance or the surprise would occur relative to consensus.
So remember, here on this channel, I'm consistently talking about being a contrarian trader. I want to do the opposite of what the majority do. And why do I want to do that? Because the majority is normally wrong. So one of the methods that I use for this is looking at the Bitcoin and the exchange liquidation map for crypto. Right now, we have a little bit of a problem, I see. That problem is most people are long. They're going long at near all-time highs. This is exactly what we see time in and time out. They don't want to go long when there might be more opportunity down here, which is exactly where I showed me going long, and you can see the profits are coming in already. Bitcoin $3,000, Ethereum $2,500, my multiple short-term long-term low leverage strategy, and my Dogecoin trade, which you can see right here. I got in these when people were scared. How did I know they were scared? Fear and greed index last week was at a 33. We had the leverage absolutely crazy in the opposite side to what we see right now, with accumulative short liquidations all up here, meaning the market was going very, very short down here. They're doing the opposite today. They're going long up here, meaning I want to be taking a little bit of profit to make sure that I protect my downside. If you see this S that was there, that's now going away. Hopefully it comes back in a second. Come on, do me a favor here. I'm filming a video, guys. Come on. There we go. We can see the S here. That's where I took a little bit of profit. And I don't get wrapped up in the fact that I was a little bit too early there, because remember, I'm here for the cash flow. So I also have my XRP trade back in 3,700 XRP of profit. How did I get that profit? Because I started and added to this position when XRP's price came all the way to the bottom of this wedge, broke out, came all the way down, and I added again here. That was going against the general consensus of the market, which I could see by going here, switching that to XRP, and I could see that everyone was short on the market. Right now, there's a little bit of longs coming in, right? But not as many as the shorts. In fact, there is overall about similar, but back when I opened those trades, it was basically all shorts, guys. Of course, there's going to be longs coming into the market now that we're moving up, and I want to be going against that market. However, the way I'm looking at this right now is we're yet to even break our first line of resistance, and I think that is coming for XRP. But let me stop yapping and let's get back to Tom Lee.
And often it makes you come to a counterintuitive conclusion. The third thing that we always keep in the back of our minds is that there are longer term drivers of markets, and I think the most underappreciated is demographics. That demographics are more important than even economic policy. And it's something I learned when I was a wireless analyst. Before I became a strategist in 2007, I'd spent the prior 14 years of my career as a technology analyst covering the wireless industry. And one of the things I learned was that the potential of the wireless industry was underestimated by most people because they didn't think about the demographic impact. That if 18-year-olds had a adoption rate of 100%, like you could see it in Korea in the early days, that meant that as they became 40 and 50-year-olds, the penetration rate of older adults would get to 100%. That means wireless would grow vastly over time because of this demographic impact. We found that the stock market really follows very closely the demographic cycles of people aged 30 to 50. And that's kept us bullish since 2009, because that's when that demographic actually bottomed. And the fourth principle we have is that you can't fight the Fed. In 90% of the instances, when the Fed is dovish, you have to be bullish. And when the Fed is hawkish, you have to be bearish. But 2022 and 2023 was really the exception, because in late 2022, the Fed had to be hawkish optically, but actually they had turned dovish. That's the reason we had turned bullish and stayed bullish in 2023, because even though the Fed was explicitly hawkish, they were actually dovish.
So the Fed, very important to pay attention to whether they're hawkish or dovish. What does that mean in our terms? Dovish is bullish, hawkish is bearish, right? And right now the Fed is starting to cut interest rates. In fact, we're close to 100% chance that they will cut interest rates this month, and even 80 or so percent for the next month. And this is how the liquidity starts to flow into the market. Then people get access to cheaper money, and that money will hopefully flow into the likes of the altcoins. Could be XRP, considering how much regulation and regulatory clarity that there is around XRP.
But I would say those four principles govern almost 80% of how we view markets. So we tend to stick with a single number. And the way we develop that single number is everything you've described. We look at what could the PE be, what could the earnings power be, where could the surprise come from, how much will liquidity matter, and how much would risk appetite matter. And sometimes risk appetite is the most important thing, sometimes earnings. And then we actually have to use judgment to decide which one's the most important and come up with a single number. So I would say our targets aren't science, but it's where we're the most confident that that's the most probable path. And it's a process we've been doing since 2009, actually since 2008, and it's actually worked pretty well. I know when I was at JP Morgan, for the first 6 years, we had identified the closing price for the S&P 5 of the 6 years within 1%. Not only was the stock market strong in December, we always established the target in early December. Not only did last year the market rise a lot in December, but it was strong in the first half. But it's directionally correct, because at the time, 5,200 was the most bullish view. I think a lot of life lessons that I live are actually life lessons for markets. I went to a business school undergraduate. I went to Wharton as an undergraduate and graduated, and my first job, which was a stock research firm. And I was very fortunate to have been assigned. When you get a job in research, you don't pick the sector, but I was assigned to the wireless industry, which in the early 90s, it was in its infancy. There were only 34 million cell phones in the early 90s, and today there's 7 billion. Right. So you can imagine that is a hyper-growth industry that has grown faster than even the internet.
Ethereum isn't just holding its ground. It's
to how I view
piece of research leads to the same conclusion.
Pivotal to how I view markets. I mean, foremost, the wireless industry didn't generate money. The industry was always borrowing money. And so we had to develop a way to actually value the stocks, the equities, without earnings. For most of my first, let's say, decade of that career, most people I met would say, Tom, the wireless industry is worth zero because they don't make money. But we'd always be like, well, what is the value of their subscribers or the spectrum they own, because they aren't capitalized on the balance sheet? And eventually they make money, but they have to spend marketing dollars to acquire the customers and build the networks. So it was really during that period that I learned a couple of things. One was that you can follow what the bond market is doing to know if there'll be moves in the stocks. So I learned to call our high yield desk every day and ask them the levels of different companies and were they trading better. And of course, if a bond started to trade well, then that meant that the bond market sensed something was improving and therefore the stock would react. And so that was very helpful, and it really taught me to look at stocks as the junior piece of the capital structure. Whatever bonds are doing, stocks will follow.
Right.
Another thing I learned was how important the intangible value of an equity is, because in the wireless industry, they had to front load the cost of building the network and then acquiring a customer. So they didn't make money until 1 or 2 years later. And the wireless industry operated as what you'd call a long-term greedy business. They weren't trying to make money in the short term, but all the investment they were making created value in the future. I was very, very fortunate to pick stocks almost at the bottom. And people always ask me, and so I had some very famous bottom calls. People ask me, how am I picking bottoms in stocks? And what I have shared with my friends but never shared with my clients was that the stocks I would upgrade was based on me talking to all of my clients. And at the time I might have 70 or 80 clients, so it wasn't hard to talk to everybody. And the ones that they were the most bearish on were the ones that I would upgrade. And the ones they were the most bullish on were the ones that I didn't think would work.
Is that not so interesting, guys? So think about people who talk about crypto, think about your friends, think about what they're really bullish on, and think about the market and the sentiment. Now, this reminds me of how people outside of our community in XRP feel about XRP. Everyone is so bearish on it all the time. XRP is one of the best performing assets in crypto, right? This year, look at that, 473%. But you wouldn't know it if you weren't in our little chamber, right? Echo chamber. No one's talking about it because nobody wants to actually accept that. Everyone wants to say how bearish and bad it is. And that's pretty much what Tom Lee is saying here. So, could be a reason to be bullish, not guaranteed, but I'm liking it.
And it's an example of how consensus gets crowded. So I use those same principles today when looking at markets. When inflation expectations hit 4.3% 1 year forward, it is always marked a tactical low for the stock market because people get overly worried about inflation. So there's a lot of signal that still comes out of realizing what becomes crowded.
Personally, I think that's a really eye-opening way to look at the market. It really makes me feel a lot more comfortable in my contrarian style of trading and investing. As you know, I was a long-term investor in Bitcoin, in Solana, in XRP during the bear market, and I've been reaping the rewards recently. Now, to get even more profit, I use things like low leverage when the market gives me the opportunity for a longer term swing trade, and then higher leverage when the market gives me the opportunity. This is why I might have gotten a little bit late for this XRP trade, but I used higher leverage to still capitalize. Okay, so I trade essentially against your normal person who is bearish when the market gives an opportunity and bullish when the market gives a worrying sign. Right now, I think that XRP is still got a big opportunity to go to the upside. I could be wrong, but I'm putting my money where my mouth is. Don't blindly follow me. I am doing this. You guys do your own research. But listening to someone like Tom Lee explain this, knowing he's super bullish on Ethereum, if Ethereum can double from here, altcoins could do even more. And I want to be positioned in those altcoins early. That's why I have these positions. And if you guys want to do something similar, whether it's long, short, whether it's XRP, Bitcoin, Solana, or whatever, you can trade over on BYDFI. The reason why I like BYDFI, I can access it from anywhere I've been recently. See the background changes all the time. It works perfectly, and you can get that massive bonus if you use the affiliate link in the description. On top of that, I have the completely free WAP group where you can see my complete strategy. There's an intro into crypto and there's macro insights, and you can get it all for free using the links in the description. And I'll catch you guys in the next video. Peace.